All right. Well, welcome everybody. It's a Monday, end of July already, which is crazy. So today we are going to go over. So I thought I would do maybe like a two-part mastering contract cancellations. Um, Today I was going to talk about listing agreements because there has definitely been an uptick of canceled listings. Some of you are doing it on purpose. Some of you are, getting this request from your client. So I wanted to go over, um, you know, listing cancellations. Why are so many cancellations coming up? Ways to prevent it. And we're just going to go through the whole process, really. But before we get started with that, we have Paul with Tried and True Home Loans and he's going to give us the mortgage update for this week. How's it going, Paul?
I'm good. I'm good. Thank you. So everybody, Rise Realty owns Tried and True Home Loans. Just want to put that out there. So we're not just a broker shop down the street. Um, okay, so I have a product that many of you might know about, many of you might not fully understand about. So I'm going to share it to you. All right, let's see if I can share. Okay, all right. Alternative financing, DSCR loans, a strategic lending option for real estate investors. We'll check it out. An overview of DSCR loans. DSCR is spelled out debt service coverage ratio. Like, what is that? Loan assess the income generated by the property, not the borrower's personal income. So think about back in the old days where you didn't have to disclose income, period. This is something very similar, but it's available as an investment loan, ideal for real estate investors and self-employed borrowers. Honestly, if you're W-2, you probably can get involved in that as well. Focus on properties rental income to support the loan payment. Common among private and non-QM lenders. So typically, you're going to see 20 to 30% down payment. You might see some lenders offering 10, 15% down. That's probably because they need the business, but they're very, very, very tight in cherry picking who the borrowers are going to be. Almost 800 FICO score. You got to be like in their court, their guidelines. Okay, so minimum credit score range is 620 to 680 as a minimum. Keep in mind, the higher the credit score, the better the guidelines, the better the interest rate. The lower, just like any other loan product, the interest rate is definitely higher. The property must be income producing, lease or lease ready, and we will get to that. Most lenders that I'm seeing out there, no recent bankruptcies or foreclosures. Okay, pros and cons. Pros, streamlined approval process. Ideal for portfolio expansion, income base. Bad, typically higher rates than traditional loans. I'll get to that in a minute. Pursue excellence. Our customers consistently praise the exceptional quality of our service, only because this is very streamlined. There's no, if you have some general good credit and stuff, you got the down payment, closing will fly. No nicky picky. So key features of DSCR loans. This one says no W-2, but right now I am seeing that some lenders are accepting that case by case basis. Pay stub or tax return needed. Now let me take a step back. This loan does not require W-2 pay stub or tax return needed. However, if you're a W-2 borrower, self-employed, um, it's basically for anybody who wants to get into investment property. Of course, there are some requirements when it comes to that, and I will also get you more information on that. So, like I said, fast approval, closing process, loan qualification based on property performance. How do you know? How do you know if the property can perform? So, when you get to if you if when you get a pre-approval on a DSCR loan, Basically, you're going to be looking for areas that does the property rent. Many of you are LA, San Diego, many areas of Texas with loans as well. Um, what you want to do is when we order the appraisal, we're going to be asking for rental comps. And those rental comps will tell you exactly what the rent comp is going to go for in the area and potentially for the property. And I will explain a little bit more about that. Common for rental properties, short-term rentals, Airbnb, and multi-family unit. Airbnb, a lot of the success would be the area Big Bear, maybe parts of Ottawa, the popular, location, people by the beach community that rents. Okay, going back to ideal borrower profile, real estate investors with rental income, borrowers with complex or non-traditional income, self-employed individuals, investors seeking to scale portfolios without personal income review. Again, you don't need your document, W-2, you don't need your tax returns and things like that. You're not disclosing personal income. The appraiser is going to do rental comps within the area. The other choice will be is if you have a renter already standing by, rental agreement will work. Um, if a renter is already in the property, that will work as well as long as there's going to be an agreement that that renter is going to agree to a new agreement if they're going to get this kind of loan.
What I do like about the DSCR, if I can pipe in real quick, is I've run across a couple um, owners who own, their W-2 income, they own a few rental properties, but now they're getting to a point where their debt to income ratio isn't working out when they want to buy a new one. And so use the DSCR because it's strictly property performance based. And so this allows them to just continue buying property, buying property, buying property without having to look at their debt to income ratios and things like that. So they can continue expanding their portfolio without running into income limitations, essentially. So that's really what is so great about these loans, and they're super easy actually and fast.
Yeah, especially if you were trying to buy an investment property, using a traditional conventional loan, you got the underwriter looking at your tax return. Let's say if you have two or three other investment property on your Schedule E, you deduct a lot on your Schedule E. You deduct, and it just makes it look like you're poor, which after expenses maybe. Uh, Now, you as realtors, if you were to do this, Schedule C, you put your gross income, then you deduct, and then the net kind of like, and the underwriters have to look at it in the government's eyes as far as your true income. They have to go off a tax return. So this program does not require tax returns. Um, and so you or your client trying to increase your rental base, this is a great program. And I will explain how it works in general, okay, in terms of how do they qualify people? They don't just give them the loan. Well, first of all, 20 to 30% down in general, because most likely you're not going to put 20 to 30% down and just walk away if the market crashes. I'm not saying it's going to, but I'm just saying what if? Walk away. Why would somebody walk away with 20 to 30% down when you know that 10, 15 years from now, you're going to make a substantial amount of money out of this property? Okay, so I'm going to explain how this works. Monthly rental income, let's just keep in mind, monthly rental income is $2,068.43. I'll explain how did I get that. How did I get that in a minute? Okay, so I know a lot of areas purchase price is not going to be 250, it's probably going to be much higher than that, but I'm going to give you a general idea, example how it works. So you got the purchase price 250. You're going to put 20% down, so your loan amount 200,000. Interest rate today, I have a lender today that's 7.5%. Now, DSCR loans, non-QM loans, usually the rates are sitting 7.5, 9%, 10%, depending where your interest rate is and so forth. This would be the best of credit. Um, Back in the day when interest rates were 2, 3, 4, and 5%, both interest rates for the non-QM were about the same. Maybe they might have been 6.5%. They don't move around as much as a traditional loan does. So you're probably gonna go, hey, 7.5% down. That's the same as the traditional loan. That's because of the interest rate environment. But typically, that's where they are typically. This one is 7.5% down, or excuse me, 7.5% interest rate. This specific scenario at $400,000 had no points, which was fantastic. So, okay, long term, 30 years fixed. They do have adjustable. Given the interest rate environment, people are going for fixed rate to be more secure. Okay, so how did I get to $2,068.43? So the mortgage payment is right here, PTI breakdown. Principal and interest, you're going to see 1398.43. That's based on $200,000 loan, that's 7.5% down, or excuse me, 7.5% interest rate at 30 years. Taxes, I just estimate some areas have mellow rules, some don't. So I just threw on $400 a month. Annual tax 4,800. Insurance, many areas I'm seeing 200, 300, 150. I just threw 270. I'm just doing it for an example. Estimated annual premium 3240. Total PTTI is $2,068.43 monthly payment. So basically, as an average, when they do the comparable rent, they want to make sure that the rent is going to be covered at least the mortgage payment, at the very least. There are programs that they might be able to be very lenient, like if the rent comes in, or the comparable rent comes in less than the actual rent, they might consider that. It depends on the down payment. It depends. Are you a new investor or are you an existing investor? There's all kinds of variables. Um, but that's what this is all about. So in your brain, generally they want to see the mortgage payment being covered. If it's not going to be covered, they're going to want to tighten up the belt and go, okay, are you putting more down? Is your FICO score much higher than usual? What's your history? Do you have other rental property? Now, if they start asking for, do you have other rental property? They're not asking for tax returns in terms of, hey, are you making money on the other rental property? They're just asking, do you have title on those rental property? Okay, prove it. You approve it with the title approval. It's got your name on it. Okay, this family or this gentleman or lady might have experience, so they'll just give you the loan. Okay, some of you might be confused. Some of you might know exactly what I'm talking about. If you would like to talk more about it, I'd be more than happy to discuss. And like I said, this is a great program. If you know what you're doing, it's not one of those stated income properties where you're just going to move into it, live in it primary. Now, traditional loan, when you move into a home and you're buying it as primary, you're signing a note that within 60 days you're going to move into property. You're going to live in it for a year before you can do an investment property or a second home. Second home, the old days, literally, the note literally said you will never ever rent this property out ever while you have the note. Over the years, Fannie and Freddie changed that. They took that verbiage out, which is kind of silly. I don't know how long the second home would have to be a second home before it converts to anything what you want to do, rental or things like that. This one, some lenders will say you absolutely have to have an investment property. Some lenders will say, I don't care. It's an investment property, period. You're not signing that you're going to live in it, second home. You're just literally signing this is an investment property. It qualifies as an investment property. You could do whatever you want with it. Some lenders are picky. Some might say, we want to make sure that you don't move into it. That's just their way of doing it. The guidelines vary lender to lender. It's not like a traditional where Fannie and Freddie are overseeing, okay, this is the guideline for primary home, second home, investment property. So the challenge is one lender might say, hey, you must have this, where another lender, hey, you must have that. So it all depends. That's all I have to say.
Yeah, there's lots of different little guidelines there. First-time investors are fine with some of them, meaning you might rent a property and then you want to buy a rental through this program. Um, so it's case by case basis, but I'd say that there's a lot of options and a lot of flexibility with with these programs, and they're great for expanding portfolios. So let us know if you're interested in those, the DSCRs. Let's see here. All right. Okay. So, um, like I said, we are gonna cover, so we probably do like oh, and also thanks, Paul, for sharing today. Um, Probably do like a two-part on this for mastering contract cancellations. These are definitely kind of in the, upswing right now. Over the past couple months, I've been seeing a lot of canceled listings, a lot of canceled sales. Buyers have been a little more picky lately. Sellers have been, antsy to get their home sold. They're wondering why it hasn't sold in the first week or two, like it was several months ago or even several years ago. So, we're in a definite flux in the market right now. So, I thought that I would cover listing agreements today, and we will just go ahead and get started on that. So, first, let's touch on top 5 reasons homeowners are canceling their listings right now and hiring an alternative agent. Um, and I think a lot of this boils down to your initial conversation with your potential home seller, your listing appointment, and not setting proper expectations up front of what market conditions are for their local area, and not showing them data, not having a business plan, a marketing plan, all of that. So number one is unrealistic pricing expectations. We have sellers out there who are, well, let's go ahead and list it here, even though the comps are showing here, and we'll just negotiate price. But unfortunately, in the market right now, that tactic is not working well because the home just isn't getting shown if it's listed too high. So setting realistic pricing expectations up front with them can help you maintain this listing for the full contract length and plus any extension that you can get. So, um, if the home sits on the market too long or requires multiple price reductions, sellers often blame the agent, not the market conditions, and seek a fresh start with someone new. So we want to avoid that by having real conversations with them and reviewing comps, trends, data, all of that up front. Disappointment with agent performance, poor marketing, weak communication, or lack of proactive strategy often leads to dissatisfaction. Sellers feel their home isn't getting enough exposure, such as weak photos, no social media push, or no open houses. They may lose confidence and look for a more aggressive agent. Um, one of our agents just went on a listing appointment this weekend, and that's exactly what happened. It was a canceled listing. The photos were, pretty atrocious, actually. They didn't have the property pinged right on the map. It wasn't even showing in the correct location when, you would look at the map view. It was over off into another part of the city. Just a really poor job in general with the listing input, and the owner ended up canceling on him and is now looking for a new agent. And that's our agent went and presented their listing presentation. So looks like they'll get that one too. So congratulations. Market shifts and stale listings with higher mortgage rates and tighter affordability. Homes are taking longer to sell. I'm sure we're all experiencing this in your local market right now. Sellers sometimes cancel and relist to reset days on market and appear as a new listing to buyers and the MLS, even though that tactic is increasingly transparent. And some of you have that same tactic. Um, MLS does frown upon that. They've made some updates to their policies with that, if you've noticed over the recent years, but that is something that definitely happens. Agent rotation tactic. Some sellers, even investors, plan to test different agents from the start. They sign short-term agreements to evaluate performance, then switch if results aren't immediate. Um, so try not to get caught in that. Misinformation or misguided advice. Sellers are sometimes convinced by a new agent that a different strategy, such as price, staging, marketing, will succeed, even when the previous agent was doing the right thing. This is especially common in a competitive listing agent Market where agents overpromise to win the listing. All right, so how can we prevent these listing cancellations? Like I said, setting clear expectations from day one. Be honest about market conditions. Don't overpromise price or speed. Educate sellers on comparable homes, days on market averages, and buyer behavior. And I don't always, or I actually rarely recommend, the automated value models. If you're using that to price the homes for your listing, I don't recommend those. They don't take into account trend very well, in my opinion. Go in there into MLS, pull up the neighborhood, run comps manually, and study, how many pending sales are there. Call up those listing agents, see if they're even in contract around that list price or not, because that's going to be your new comp probably when it closes. So that's today's information, not 30 days ago or 60 days ago information on the actual sold comps. That was the market several months ago. You want to see what's happening right now. Are we still continuing a downward trend in that neighborhood? Are things looking like they're turning around? So actually study the data by pulling it up manually in the MLS is my recommendation. Uh, Pre-frame potential outcomes, let them know that the price reductions or longer days on market might be necessary and explain why that doesn't mean failure. Create a timeline with milestones, showing your plan from pre-listing through post-close so they can track progress and feel reassured. Show a strong marketing plan. This is really important, especially in today's market. Um, because listings are moving a little slower, so we need to do a better job as, their representative in getting their home out there in front of potential buyers. So include a clear plan with professional photo, video, drone, online listing syndication strategy. We went over that a little bit a few weeks ago. Social media marketing with boosted ads, weekly open house schedules if applicable, and then present a sample marketing report so they know what updates to expect. Communication's a big one. Maintain proactive communication, weekly update calls or emails. That's a non-negotiable. If you want to keep this listing, if you're feeling that they might be getting frustrated, days on market are getting a little long, you want to be touching base with them quite often. Um, Review showings, feedback, web traffic, market changes, etc. Send showing feedback in real time and tell them what it means. Even if there's no new movement, a check-in matters because silence breeds doubt. Reinforce your unique value. So remind them of your negotiation skills, your marketing research, your local knowledge, vendor network, and position yourself not just as a marketer, but as a problem solver who earns them the best net return. Have a plan B, pricing, strategy, timing. Build in scheduled checkpoints to revisit pricing or tactics. For example, if we don't have X showings or Y offers by this date, we'll review strategy and make a shift. This shows that you're thinking ahead, which builds confidence with them. Show market feedback and adjust. So present the real data, number of online views on third-party portals, showing stats, buyer objections, or feedback themes. Sellers are less likely to cancel when they see that the issue isn't the agent, it's the market, and that you are adapting. Address frustration before it festers. If you sense frustration or disappointment, talk about it head on. Ask, is there anything you feel we should be doing differently? Listen closely. A lot of times the sellers just want to be heard. Everybody just wants to be heard. Um, Being proactive here can often diffuse a pending cancellation. And use a strong listing agreement. This is important. Just as important as writing a purchase agreement properly up front and covering a lot of potential scenarios up front. You'll want to do that with your listing agreements too. So um, set your minimum listing terms, 3 to 6 months, depending on market. Early termination fees, if there is going to be a cancellation, have it in the listing agreement of what that cancellation is going to look like. Yeah, we don't want to talk about it, but we, these things can come up and they can happen, and sometimes it takes us by surprise. Or offer an easy exit listing with conditions where sellers can cancel, but only if they follow specific steps, such as giving you written notice and time to cure issues, repayment of marketing expenses, referral to another agent within the office, so on and so forth. So those types of things can help, should a cancellation come along, to be able to facilitate it a little bit better and to make sure that you can recoup, any of your marketing expenses, since you weren't given the full opportunity to market and sell their property. So, um, let's go over. Yeah, this really didn't line up real well. Um, so we'll get into cancellations now. If you have any questions, feel free to raise your hand and I'll unmute you if you want to ask, or just throw them in the chat. I'll answer them as we go along. Cancellations tend to bring up some questions here. So let me move the chat box over. Okay, so I took an exclusive right to sell listing. The seller decided to cancel. Can a seller do that? Would I be entitled to a commission, even if a ready, willing, and able buyer was never procured? So, where an owner lists a property but then decides not to sell by withdrawing it from the market or even simply canceling the listing, under the CAR RLA, the broker is entitled to recover the full commission. It makes no difference that the buyer was not procured. In essence, the listing agreement shows the seller the option of either selling the property or canceling, but owing a commission. Uh, However, most brokers do not demand the commission, even though they might be legally entitled to it. Brokers typically see client relationships and goodwill as more important. However, this is where you stand legally with these RLAs, and this is, how you can dig your heels in with either avoiding a cancellation or, recouping your costs, things like that. Obviously, there is a whole legal process to go and, recoup your commission. And, we got to think about things like bad reviews and things like that. So sometimes it's just really not that worth it. But there are um, some examples that come up quite often where, our agent was doing a good job and, another agent got into that seller's ear or, whatever. And so sometimes you want to fight back a little bit. So if we're looking at the RLA, which we are right here, a little snippet, you look at D, 4D, and it has the compensation terms right there. Compensation is earned, and seller shall pay broker as follows. Completed transaction or seller default. If during the listing period or any extension, any other broker, seller, or any other person procures a ready, willing, able buyer who's offered to purchase the property on any price and terms accepted by the seller, provided the buyer completes the transaction or is prevented from doing so by the seller. Broker is entitled to compensation whether any escrow resulting from such offer closes during or after the expiration of the listing or any extension. We have the continuation of right to compensation. We'll go over that actually further down. Seller interference with listing. We're going to cover that as well. So, do we have a couple questions coming in here? Oh, in the Q&A. Says you're the broker, so do you go after it after if want to let the client out? When it comes to cancellations, um, I go by what the agent is wanting to do and get out of the cancellation as far as marketing fees, things like that. So I will listen to, what you guys are wanting out of this cancellation. Sometimes you're like, I don't care, I don't want to deal with these people anymore, just cancel it. And other times, you're pretty upset, and yes, I will stand behind you and negotiate it with the seller on this cancellation or try and talk them off the ledge or, whatever the outcome needs to come to. Sometimes it is just not worth it. And it also kind of depends on how I felt you have done, after I listened to both sides of the story with the listing itself. So sometimes the sellers have a valid point with their agent not performing. So keep that in mind. But yes, I will back you if you want to sit, hold tight with recouping costs and things like that. So is a commission earned when a seller refuses to accept a full price offer from a ready, willing, and able buyer? So under the RLA, the answer is no. The seller must additionally accept the offer and close or breach the contract to purchase. If a seller simply refuses all offers, no matter how good they are, or sorry, what if a seller simply refuses all offers, no matter how good they are? If a seller refuses offers in bad faith as an attempt to sabotage the listing, then that is a breach of the listing agreement and the commission shall be due. 7D of the RLA has this language pre-printed in there. Says seller good faith, seller agrees to consider offers presented by broker and to act in good faith to accomplish the sale of the property by, among other things, making the property available for showing at reasonable times and subject to paragraph 2C4, referring to the broker all inquiries of interested parties in the property. Seller is responsible for determining at what price to list and sell the property. So yes, if they are sabotaging the listing and the sale because they simply do not want to sell anymore, or they don't want to work with you anymore, or whatever it is, that is not acting in good faith and can be a breach of the listing agreement. So what form do you use to cancel a listing? It's going to be Form COL, cancellation of listing, is the form to use to cancel a listing agreement. This form must be signed by the principals, which are the sellers, and the broker for it to be valid. So if they just sign it and it gets sent over to me and I don't sign it for whatever reason, then it's not a canceled listing yet. I have to actually have sign that. So keep that in mind. And if you sign it, it is not valid. The broker actually has to sign it. A listing cannot be canceled in MLS without this form being fully agreed to and signed. Additionally, only the broker can cancel a listing in MLS. That's something that came about over the past few years. And so if you're going to ask me to cancel a listing in MLS, I need to have the fully signed cancellation form, and then I have to go into MLS and cancel it through my account. They won't allow you to do it. You don't have that option in there anymore. So they made that change a few years ago. Man, this really just didn't line up very good. You know what? I'm gonna grab it on here. Unfortunately, maybe I can make it a little bigger. Sorry about that. When I PDF'd it, it just didn't go very well, I guess. So I don't know if this is much better. Sound of good faith. Okay. How do I complete the form? Hopefully this can be viewed a little better now. The cancellation of listing. So we're looking at the COL. You have the name, obviously, of the brokerage, when the listing agreement was agreed to, seller name, and the street address. So first section here is broker and principal agree to cancel the listing and terminate their agency relationship, duties and responsibilities with and to each other, subject to the terms and conditions below, if checked. So you're going to check either A or B, or you can check both. And this is if you're wanting to still have the opportunity to earn commission based on other buyers that have been through the house, offers made, things like that. So says principal agrees to pay broker the amount of compensation specified in the listing. Checkbox A, if prior to the listing, end of the listing period specified in the listing or extension, principal enters into a contract to sell, convey, or otherwise transfer the property. So what you're doing, this would be a conditional cancellation of the listing. This is not a unconditional. Or B, if within, and you'll type in some calendar days there, after this cancellation of listing or checkbox, listing period specified in the listing, which would be in A, principal enters into a contract to sell the property. And this would be to anybody who has physically entered and was shown the property by broker or cooperating broker, or submitted submitted to seller a signed written offer to acquire the property. So you can do A or B, and again, this is conditionals. C, in the event a transaction specifying A, B above, broker has no obligation to represent principal in such transaction. And I'm going to cover that a little further down. And compensation is payable upon close of escrow. And then two, you would put what that amount is. And this should match what you have in the listing agreement is typically what I see there. Three would be principal agrees to pay X amount of dollars for out-of-pocket expenses, costs incurred, and services rendered in marketing the property prior to cancellation of listing. So this is where you want to have your strong listing agreement and say, hey, in the event of a cancellation, I will be putting forth personal, money, marketing expenses to get this property sold. Um, Photos, drone shots, open house signage, whatever you're doing, your Facebook marketing, if you're boosting it on third-party sites, whatever that total is, um, you would want to put it here. And if it's spelled out in the listing agreement up front, this is a much easier um, uh, way to get this signed because you could just point straight to the listing agreement and say, hey, look, you already agreed up front that you would pay me in the event of a cancellation. If you do not have that in your listing agreement, this can be a little tougher to negotiate with the client. It's not impossible, but it's a little tougher. And then number four would be principal owes no compensation to broker. So this would be your unconditional cancellation. And this is what I see a lot of you do because, maybe you're canceling it to put it back on the market. I, um, again, MLS frowns upon that, but I know it gets done. Um, so this would be your unconditional. And then you see seller sign and then send it over to me. I'll sign it. And then we'll kind of go from there. So let's talk about if you're doing the conditional cancellation, let's reference the protection clause that is in the RLA. So a protection clause can be found in the car listing forms, paragraph 4D. So your RLA, your vacant land, all of that. And you're looking here at 4D2. I skipped over this one previously, but that's because I'm going to cover it now. Continuation of right to compensation for broker procured buyers. So if during the continuation period specified in paragraphs 2C3 of the RLA in the grid section, or same period of time after any cancellation of this agreement, unless otherwise agreed, seller enters into a contract to sell, convey, lease, or otherwise transfer the property to anyone, a prospective buyer, or that person's related entity who physically entered and was shown the property during the listing period or any extension by broker or any other broker, or for whom broker or any other broker submitted to seller a signed written offer to acquire, lease, exchange, or obtain an option on the property. Broker's right to compensation pursuant to this paragraph shall only apply if prior to expiration of this agreement or any extension, broker delivers to seller a written notice of the names of such prospective buyers. That is form NPB, which we will look at. And that is an important form if you want to potentially still get paid from all of the buyers that have been through the home while you have the listing. So a protection clause, sometimes referred to as a safety clause, gives a listing broker the right to be compensated if a prospective buyer or related entity buys the property with a certain period of time after the listing period expires. So what is a prospective buyer? Again, anybody who physically entered and was shown the property, someone for whom an offer was submitted to the seller during the listing period or any extension. At the time the listing is executed, the seller and broker need to agree on a length of time for the protection period. The amount of time stated is in the grid section, section 2.3, which I just referenced. That is right here. This is the continuation period. It can be whatever amount you can agree to in here. I usually see somewhere between 30 and 60 days in here. It's completely negotiable. This does not mean your listing continues another 45 days in this example past the expiration or past the cancellation. This means that if any of the prospective buyers that came through the house during your listing period end up writing an offer and purchasing that home within 45 days after the cancellation or expiration, you are still entitled to compensation at that point. So that is what that continuation or protection clause is. Under the car agreement, the protection clause applies only if the broker has given the seller a list containing the names of the prospective buyers no later than the end of the listing period or any extension or cancellation. So you need to provide that list of prospective buyers to the seller prior to the cancellation and or expiration if that's happening. So to create this list, broker may use Notice of Prospective Buyers Form NPB. That is this form right here. And you'll put in here, this is a notice being provided to you as required by the RLA or any other agreement, but it's defaulted to the RLA between seller name, Rise Realty, the address of the property, the listing period. You want to put what the listing period is in the contract, not from beginning to when it's getting canceled, but what was the total term goes here. Compensation agreement. So this is just repeating what I've already repeated. It's reminding them essentially that you're going to be due commission if any of these buyers right here end up buying the house within the next 45 days after the cancellation is signed or the expiration happens. So we're saying, maybe Adam here went through the open house. I showed him. Michael also went through the open house. I showed him. They didn't make any offers or have any agents. Then Adam came in and with his agent, and they wrote an offer, but it didn't get accepted for whatever reason. Maybe just didn't come to terms. Now, what could happen there is maybe that happened over the weekend. You didn't come to terms, or the seller all of a sudden wants to cancel for some reason on, today. And you're like, well, that sounds kind of fishy. So you definitely want to put this into play because it sounds like Adam might come back around after this thing has been canceled and relisted with another agent, potentially for a lesser price, and remake an offer. And you want to be able to have a right to that compensation. So notice 3B of the notice of prospective buyer states that the notice must be given no later than the end of the listing period or an extension or cancellation. In other words, this must be sent prior to a cancellation or expiration. So keep that in mind if you want this to be valid. All right, no questions. So we'll go on to the next. So does protection clause automatically apply? And that is no. Some brokers make a business decision that one way to attract listings is to emphasize their ability to sell the property during the listing period. For such brokers, deleting the protection clause serves as a marketing technique. Other brokers may simply leave the protection period space blank or write in a 0 for the number of days of the protection period. Additionally, if no list is provided to the seller on or before the expiration of the listing term or any extension or cancellation, then the protection clause is not activated. Each broker must make an individual business decision on whether, and if so, how to utilize the protection clause. So in section C3 here in the RLA, if you have a 0 or blank here, there is no protection clause, and you will not be sending over the notice of prospective buyers or anything because there is no protection clause for you. So I highly recommend putting in a number there. Are there restrictions on a listing broker's right to include a person's name on the protection list given to a seller? And that is yes. The protection clause applies only to those individuals who, during the listing period, physically entered or shown the property, submitted a written offer. Additionally, the seller must be given a list containing buyer names no later than the expiration of the listing or cancellation. Brokers who have their protection list questioned by a seller can try to discuss the list with the seller. If the questions have not been resolved to everyone's satisfaction, then consistent with the listing agreement, parties can use mediation to try and reach an agreement. So essentially, you're not agreeing to cancel the listing until this list is approved by both parties. So now you're going to mediation, things like that. I'm sure the seller wants to sell their home. They can't do so because it's still sitting in hold or withdrawn status in MLS, because we're not going to cancel it until there is a signed cancellation of listing. So I actually can't even go in there and do that because that would be an MLS violation. So, and that is one way to, I guess, negotiate getting your cancellation form signed on the terms that are agreeable to you. Is, how motivated is that seller to sell? Do they really want to get this home sold? And if they want to get it back on the market, they have to agree to this cancellation. Both parties need to agree to the cancellation in some form. So we've had that happen a couple times this year where it's been a kind of a battle, actually, but it's just part of the business. So how can a listing broker determine if a seller has previously listed a property for sale, and if so, if a protection list has been given to the seller? So this is an important aspect here, because if you are the second agent or third or fifth, whatever, going into the listing appointment and you know that this thing has already been on the market and it looks like it's been canceled, or potentially even expired, we want to know about this potential protection list, and here's why. So a prospective listing broker can determine if the property has been previously listed for sale, and if so, whether the previous broker has provided a protection list by asking the seller. In particular, by asking the seller for a copy of the prior listing contract to determine the length and applicability of the protection period. In the listing agreement under 2C4, seller warrants that the seller has no other obligation to compensate another broker out of the sale of the property. There is a blank line to write in any exceptions to this warranty. The language is added in paragraph 4F of the RLA, detailing how compensation is paid or not paid in the event the property is sold to a buyer on the protection list. Take note of 4C in particular of the RLA. So seller compensation obligations to other brokers. So if you look at 3 here, if the property is sold to anyone specified in 2C4 during the time the seller is obligated to compensate another broker, broker is not entitled to compensation under this agreement, and broker is not obligated to represent the seller in such transaction. So if there is a protection list floating around out there with the previous listing broker, and one of those buyers comes in, makes an offer on your listing, you're not getting paid if they end up buying it, if the seller ends up accepting it, because it has to be presented to them. The offer came in, right? So you don't want to, that's risky on your part. So this language in the listing agreement serves several purposes. First, it serves as a prompt to discuss the issue of previous listings and exclusions. Second, it provides a place to write in the name of any buyer protected under a previous listing. The listing broker may also want to check the status on the local MLS to see if the property showed up under expired listings or canceled or whatever. Finally, the listing broker may want to contact the previous listing broker directly to find out about the names of any protected buyers. So, if your seller isn't being quite upfront with you and they're like, oh, we didn't receive, any list, I think that would be suspect, and you will, at least I would want to find out a little bit more about that because there's a potential here that you might not get paid if one of those buyers comes in. What are some options available to a broker if a previous listing broker has a protected certain prospective buyers? Listing with exclusions. So the second broker can take a listing on a property and exclude from its provisions of the sale of the property to those specific buyers. If any of the excluded buyers purchase the property during the first broker's protection period, the new listing broker would not be entitled to compensation under the listing agreement, regardless of the new listing broker's marketing efforts. Whether the second broker wants to take a listing with exclusions is a business decision that may be affected by a number of factors, such as the length of time since negotiations took place with the excluded buyers, the number of buyers to be excluded on the exclusion list, length of time remaining on the previous broker's protection clause, the pool of potential buyers for the listed property, the confidence of the broker in his or her ability to locate another purchaser through his or her own marketing efforts. It's also possible to take a listing to commence upon the expiration of the exclusion period. Indicate this by writing in the date that the listing will commence, and that is, if you're looking at the RLA, page 1, that's going to be section A. So if they're like, hey, it looks like the protection clause, ends in 2 weeks, and you're pretty nervous about what that looks like because maybe they did have multiple offers or something like that, you may want to start this listing period, a couple weeks out. Another option is decline the listing. The second broker can decide that the potential payoff of selling the listing to a non-excluded person does not outweigh the costs and expenses that would be lost if the property sells to an excluded person. In this case, second broker could turn down the opportunity to list the property. So obviously that's an option too. Compromise or creative solution. Second broker or the seller can contact the first listing broker to discuss whether, and if so, under what terms, the first listing broker would be willing to remove names from a list of protected buyers. Maybe you're talking about referral agreements and things like that at that point. Are there other restrictions on a broker's ability to take a listing on property where the seller has been provided a list of protected buyers from a previous listing broker? So National Association of Realtors Standard Practice 1614 states that realtors shall not knowingly obligate sellers to pay more than one commission except with their informed consent. The Carr Residential Listing Agreement prevents realtors from being in a position of violating code of ethics by containing a clause whereby the seller warrants that the seller has no other compensation obligation except as specified. So that verbiage is found on the RLA, page 1, C24. This is what C4 is referencing, seller's obligation to pay previous brokers. So if you look this thing up in MLS, you see it's got a cancellation, an expiration, the dates are pretty fresh, then we want to have this conversation with our potential seller here. Are they obligated to potentially pay another listing broker? So this is what this line is actually referencing. So that's about it for the listing cancellation, and how to avoid them. these are kind of common right now, unfortunately. It's just, it's the market we're in. Hopefully that helped a little bit though, so you can um, protect yourself a little better just in the beginning, by setting up your RLA, your listing agreement with your client. Make it strong in the beginning. Have these conversations up front. They should appreciate you being diligent in doing all of this, especially if you're presenting your data well with them. You're talking about the market. You're pricing the home a certain way because of the market. You're explaining, why that is. You're showing your value at that point. So hopefully that can help prevent a cancellation. Nobody likes listing cancellations, but unfortunately, they're part of the market right now. So if you ever have any questions, obviously, you know, give me a call. I'm always around. We can work through these cancellations. Sometimes they're easy. We have had a few sticky ones lately that we were able to get resolved. But yeah, hopefully that helps. And buyer purchase cancellations in the upcoming weeks. We have potentially, I think we have a guest speaker next week, and we actually have kind of a new product rolling out in a couple weeks. That's really, really interesting. We'll give everybody some notice on that. Hopefully, you can join up to learn what that is. It's a pretty cool tool that I've been working with some developers on. I'm pretty excited about it. So that should be in the next probably 2 or 3 weeks. They're about ready to roll it out to our team, and we'll be the only ones that have access to that during the beta test period. So it's a pretty cool tool. So hopefully you have a great week. Give me a call if you need anything, and we will talk to you later.